Welcome to today's Explainer. We're jumping straight into a massive, highly profitable secret hiding right in plain sight. Listen, if you follow the markets at all, you're definitely used to seeing those terrifying red numbers flashing across your screen, loudly declaring these massive net sell-offs by foreign institutional investors, or FIIs. Usually it's paired with a scary news ticker basically designed to make you sweat, pushing this narrative that all the smart money is just packing up and fleeing. But what if I told you those broad, panic-inducing headlines are actually totally masking the truth? Today, we're completely decoding this FII net selling myth. We're going to cut through the panic and reveal the exact sectors and companies where these global institutions are quietly, aggressively buying right under our noses.
So you've probably noticed this paradox yourself, right? It's a brilliant question to ask. If foreign investors are supposedly liquidating their entire portfolios and pulling billions out of the country, well, why isn't the whole market collapsing? And honestly, even more confusing, why are some very specific mid-cap stocks and niche sectors booming and hitting all-time highs right in the middle of these so-called sell-offs? If you've been watching closely, you know that whenever the surface narrative doesn't match the reality on the ground, there is always a much deeper story waiting to be uncovered. And that's exactly the myth versus reality dynamic we're going to unravel today.
All right, let's pull back the curtain on the actual math of institutional investing. The media absolutely loves a simple story. But you have to remember that foreign investors are these massive, complex entities. They don't just have some giant sell everything button that they smash when they panic. Instead, they're constantly rotating their immense pools of capital. On any given day, sure, they might be executing gross selling, literally dumping millions of dollars worth of shares in a sector they feel is overvalued. But simultaneously, on that exact same day, they're executing gross buying. They're pouring millions into a totally different sector where they see untapped value. They are continuously buying and selling at the exact same time.
So understanding what net selling actually means is absolutely crucial here. It's really nothing more than a statistical outcome. It literally just means that within a specific time frame, the total dollar value of the shares they sold happened to be slightly higher than the total dollar value of the shares they bought. Think about it. If they sell 10 billion and buy 9 billion, the headline screams massive net sell-off, but that headline completely ignores the 9 billion they just aggressively pumped into the market. Keeping this real definition in mind totally reframes how we read between the lines of macro data. It's not a mass exodus, guys. It's just math.
Let's dive into the hard evidence. We're starting with the first layer of hidden buying, specifically focusing on some serious mid-cap movers. When you compare the Q3 to Q4 data, things get really interesting. In the logistics space, FIIs quietly bumped their stake in BlackBuck from 28% up to 32%. Over in manufacturing, they increased their hold on APL Apollo tubes from an already high 33.12% to over 37.5%. And get this, they nearly doubled their position in GRM overseas, going from 4.92% to a solid 9.5%. What we're seeing is FIIs steadily and methodically accumulating significant stakes in companies with really solid fundamentals, and they are completely ignoring the noise of the broader market while they do it.
Now, what's genuinely fascinating is that these institutions aren't just hunting for hidden value, they're actively riding massive momentum waves. Take a look at MTR Technologies. Their stake jumped incredibly aggressively from 15.25% to 22.25%. If you track the market, you know MTR has had this massive rally recently. So who do you think was fueling that rally and booking all the heavy profits? Yep, foreign investors. And we're seeing the exact same momentum-building pattern across the board, like with Shali Engineering rising to nearly 17% and the Multi-Commodity Exchange, or MCX, jumping from 20% to 26%.
And they're not just sticking to quiet mid-caps either. They are actively absorbing massive offloads from other players in textiles, retail, and jewelry. The story of Vishal Mega Mart is a perfect example. The company's promoters, the insiders, decided to exit and dump a massive 14% of their holdings. Now, normally a promoter dump of that size, that would send retail investors absolutely running for the hills. But foreign institutions, they practically brought a shopping cart. They swooped right in and scooped up almost all of it, rocketing their stake up to 22%. They love it when others panic, because it gives them the exact volume they need to quickly build up their positions.
This next bit brilliantly illustrates just how extreme this hidden buying can actually get. We are not just talking about a percent or two here. Shriram Finance saw an institutional leap from 45% to 56%, and even more jaw-dropping is Salmon Capital, jumping from 19% to an astonishing 46%. We are talking about massive 10 to over 20% institutional jumps happening entirely under the radar of the average retail investor. While the public is out there obsessing over the scary red ticker on the news, the smart money is practically buying out the float of these financial companies. This kind of highly targeted buying eventually builds into complete structural shifts in ownership. Home First Finance is the perfect example of what a massive institutional takeover actually looks like in practice. Today, foreign institutions hold an incredible 45.72%. Domestic institutions hold around 28%. And those original promoters, they've completely faded out into the single digits. This is such a powerful lesson. A well-run, professionally managed company really doesn't need traditional promoters to thrive, because when global and domestic heavyweights recognize the value, they will happily step right in and take the wheel.
Which brings us to this incredibly specific number, 8.5%. This is the ultimate zero-to-hero move we found hidden in the data for K-Solve Smart Technologies. Just the previous quarter, foreign institutions held absolutely nothing in this company. Zero. Zilch. Then, in one swift, highly decisive quarter, they appeared out of thin air and snatched up an 8.5% stake. And here's the absolute kicker. They didn't buy those shares from other institutions. They bought them directly from the retail public. They saw an opportunity the public completely missed, and they capitalized on it instantly.
But it is super vital to remember that institutional money is not sentimental, not even a little bit. Consider the absolute roller coaster that was Markson's Pharma recently. In quarter one, FIIs held nearly 17%. Then, by quarter two, they aggressively dumped their shares, slashing their position in half to just over 8%. Retail investors naturally panicked. But then, right in quarter three, the institutions rebounded, buying right back in to reach 16.76%. This is a massive lesson in market psychology, guys. Institutional sentiment can have and double in milliseconds based purely on their internal metrics. They don't fall in love with stocks, they just execute strategies.
And we saw that exact same wild data play out with Bajaj Consumer Care, where foreign ownership suddenly jumped out of nowhere to 16.59%. The takeaway here is that you simply cannot react emotionally to every single tick of the tape. So, let's talk about building a real survival guide mindset for this kind of daily volatility. First, you have to track the actual quarterly data, not just whatever the daily headlines are screaming. Second, expect sudden reversals. Understand that the big players will change their minds in a split second. And third, and most importantly, you absolutely must prepare your mindset. Building mental resilience against sudden market swings is literally the only way to avoid being shaken out of a highly profitable position.
Which really brings us to our core philosophy for today's explainer. The market changes constantly. To survive, you must be mentally prepared for the volatility. Successful investing isn't just about finding the right data points or even uncovering this hidden institutional buying we've been talking about. It's almost entirely about having the temperament to handle the noise. Temperament is your absolute ultimate edge. Because if you can't stomach the fact that market dynamics are going to change in seconds, all the data in the world won't save your portfolio from emotional decision-making.
So we've uncovered the truth behind the net selling myth today, and we've seen the exact companies where institutions are quietly building their empires. But you know, the 15 companies we looked at today, that's just a tiny fraction of the market. There are hundreds of other stories still hidden in the data right now. So I want to leave you with this provocative question to ponder. Which other hidden stock have FIIs quietly added to their portfolios while the rest of the market was too busy panicking? The clues are out there in the filings, just waiting to be found. Keep analyzing, keep questioning those headlines, and I'll see you in our next explainer.